Have you ever wondered what Bitcoin ETFs are? Let's delve into that. Bitcoin ETFs are intrinsically linked to the digital currency we all know as Bitcoin. ETF stands for Exchange Traded Fund, a type of investment fund and exchange traded product. This may sound a bit complicated, but it's rather simple when you break it down. Imagine an ETF as a basket. This basket holds a variety of assets like stocks, bonds, or in this case, Bitcoin. The ETF tracks the price of Bitcoin, and as an investor, you're buying a piece of this basket, not the Bitcoin itself. This allows you to invest in Bitcoin without the need to trade the digital currency directly, bypassing the complexities and security issues associated with digital currency exchanges. So in essence, Bitcoin ETFs offer a more accessible way to invest in Bitcoin. Now that you know what Bitcoin ETFs are, you might be wondering, why are they important? Well, let's dive right in. Bitcoin ETFs hold significant importance in the financial world for several reasons. One of the major ones being their potential to inject more liquidity into the Bitcoin market. Here's how that works. When more people buy into the ETF, the fund needs to purchase more Bitcoins to back those new shares. This increased buying pressure can lead to an uptick in Bitcoin's price, which in turn attracts more investors, creating a positive feedback loop. The result? A more liquid and dynamic market, which is beneficial for all participants. Bitcoin ETFs also make Bitcoin more accessible to retail investors. You see, investing in Bitcoin directly can be a complex process, especially for those not well versed in the nuances of cryptocurrency. There's the whole rigmarole of setting up a digital wallet, understanding blockchain technology, and navigating cryptocurrency exchanges. But with Bitcoin ETFs, all that complexity is stripped away. Investors can buy shares of the ETF through a traditional brokerage account, just like they would with any other stock or ETF. It's as simple as that. Another significant advantage of Bitcoin ETFs is the reduction in the risks associated with owning and storing Bitcoin directly. When you invest in a Bitcoin ETF, you're not actually holding the Bitcoin yourself. Instead, it's held by the fund, which employs security measures to protect against theft or loss. This eliminates the risk of losing your investment due to a misplaced password or a hacked digital wallet, which are real concerns in the world of cryptocurrency. So to recap, Bitcoin ETFs can bring more liquidity to the Bitcoin market, make it easier for the average person to invest in Bitcoin, and reduce the risks associated with owning and storing Bitcoin directly. Ultimately, Bitcoin ETFs can make the process of investing in Bitcoin simpler and safer for the average investor. However, it's not all sunshine and roses with Bitcoin ETFs. Despite the promise of accessibility and liquidity, these financial instruments come with their fair share of challenges and criticisms. One of the significant hurdles that Bitcoin ETFs face is the concern over market manipulation. The cryptocurrency market, with its relative novelty and global nature, has been a breeding ground for manipulative practices. Pump and dump schemes, fake news, and other deceptive tactics are rampant, casting a shadow of instability over the entire crypto landscape. This unpredictability can affect the price of Bitcoin ETFs, putting investors' money at risk. The lack of regulations in the cryptocurrency market also poses a substantial challenge. While steps are being taken to regulate the space, it's still a bit like the Wild West out there. The absence of clear-cut rules and oversight can lead to inconsistencies in the pricing of Bitcoin ETFs. This lack of standardization can create discrepancies, making it hard for investors to make informed decisions. Another point of concern is the inherent volatility of the cryptocurrency market. Bitcoin, while being the most popular cryptocurrency, is known for its price fluctuations. One moment it's soaring to new heights, and in the next, it's plummeting. This volatility can be a double-edged sword. While it can lead to significant returns, it can also result in substantial losses. By making Bitcoin more accessible through ETFs, we may be exposing more people to these risks. Lastly, the technical complexities associated with Bitcoin ETFs can be a deterrent for many. Understanding the intricacies of blockchain technology, digital wallets, and cryptocurrency exchanges can be overwhelming for the average investor. This complexity creates a barrier to entry, limiting the reach of Bitcoin ETFs. Despite these challenges, the potential benefits of Bitcoin ETFs cannot be ignored. They present an opportunity to bring Bitcoin into the mainstream financial world, offering a chance for ordinary investors to participate in the cryptocurrency market. But as with any investment, it's essential to tread with caution and do your due diligence. So, what does the future hold for Bitcoin ETFs? A question that's been on the minds of many. And the answer could change the game for cryptocurrency investing. Imagine a world where buying Bitcoin is as simple as purchasing a share in a company. No complex wallets, no confusing private keys, just a straightforward investment option available on your favorite trading platform. This is the world that Bitcoin ETFs could usher in. Currently, efforts to bring this vision to life are in full swing. Multiple organizations are working tirelessly, seeking regulatory approval for Bitcoin ETFs. For years, the U.S. Securities and Exchange Commission has been the gatekeeper, analyzing proposals, raising concerns, and so far, denying approval. However, the tide may be turning. What's driving this change, you ask? The maturing Bitcoin market, for one. As the market grows and develops, it's becoming harder for regulators to ignore. The demand for accessible Bitcoin investments is rising, and Bitcoin ETFs could be the answer. Let's not forget the potential impact on the Bitcoin market. If Bitcoin ETFs gain regulatory approval, it could open the floodgates for a wave of new investors. Traditional investors who might have been wary of the complexities of Bitcoin could have a clear, regulated pathway into the market. This could result in a massive influx of capital into Bitcoin, pushing its value to new heights. And it's not just about Bitcoin. Approval of a Bitcoin ETF could set a precedent for other cryptocurrencies, paving the way for a new era of crypto ETFs. This could significantly broaden the reach of cryptocurrencies, bringing them into the mainstream investment world. But, as with any financial innovation, there are uncertainties. Regulatory hurdles, market volatility, and investor sentiment all play a role in the future of Bitcoin ETFs. Only time will tell what the future holds for Bitcoin ETFs. But one thing is certain, they have the potential to significantly alter the landscape of cryptocurrency investing. It's a brave new world out there, and Bitcoin ETFs may just be the key to unlocking it.